Welcome to lesson 1 on how to trade with the smart money concept strategy. It's also been called the ICT strategy and everything in between, but nevertheless, lesson 1 is on market structure. Now, market structure is a way the market is organized and how prices move within it. Understanding market structure is essential for trading because it will not only help you see the bigger picture of how the market behaves, but it will also let you identify trends such as whether the market is moving up, down, or sideways. Now, it will also help you recognize ranges where price moves between a high and a low and spot key turning points for where the market might change direction. So we're going to start off with the basics of market structure, which is going to be your highs, lows, and your swings. Now here we can see that the market is moving up and is quite bullish. Now this is going to show you where we have the higher highs and the higher lows. So for example, market is moving up and we can see that we have, first off, this is our initial high, this is our initial low, and you can see we have a higher high, higher low. Now the way we identify these higher highs and higher lows is, for example, let's start off with the high. We can see here that we had a high here, and this is the price where it was at. Now we went above and broke above it, and then this is the next high that we created. So this is a higher high because it is higher than this high. Now for the higher lows, we can see here we had our initial low, so let's draw that on. Let's make this red to indicate a low, and then you can see the next low we had after the higher high was right here, also showing us that it is higher. So now we have identified that we are in an uptrend, and in an uptrend the price move up and shows that we're in a bullish market. The complete opposite should be said for a downtrend and when we're creating lower highs and lower lows. Here is an example of a small downtrend and small lower highs and lower lows. So for example, if we take this as our initial high and this as our initial low, we can see we create a lower low and a lower high. Again, because this high did not reach the height of the previous high, and this low went lower than the previous low. So it's the complete opposite to what we talked about before in an uptrend, because now we are trending down, and this is a downtrend, also signifying that the market is bearish. Then we have the swings. So we also have swing highs and swing lows in the market, and these are usually the key peaks in price movement. So swing highs, like we see here for example, represents a resistance level, and swing lows, like here for example, can represent a support level. Now these swings will help define the market structure and can signal potential reversals or continuations. So as you can see here, anytime we get quite close to this swing high, we will usually start to trend down, and here on the swing low, again we will see a nice little bounce. And in future episodes we will also talk about how we sweep the lows and highs, but I wouldn't worry about that yet. We're still on the basics. Now we know about our highs, lows, and swings. We need to also understand the different types of trends and ranges in the market. So we have an uptrend, we have a downtrend, and we have ranging markets. So quite easy to understand, as we talked about previously. An uptrend is when we are making higher highs and higher lows and moving in an upward direction, meaning the market is bullish. And a downtrend is when we're moving downwards and creating lower highs and lower lows, and the market is looking bearish. But we also have something called ranging markets, where the market will be moving sideways. So this means it won't be creating higher lows or lower highs or anything like that. It simply is just moving like this in a sideways direction. Now the key thing about ranges is that they are most prominent to break out. So it can either break up or it can either break down. Now this is where you will find the most trades, as most people are usually trading in between the range. You know, they're buying up, they're selling down. But whenever we see a breakout, that is usually going to be the biggest move yet. Now that we've covered all of the essential basics, we're going to move on to stuff a bit more advanced, such as the break of structure. So a break of structure happens when the price moves beyond a key support or resistance level. Now this break can indicate a potential change in the market direction or confirm the existing trend. So as we can see here from my poorly drawn out diagrams, we have an uptrend and we have a downtrend. So I'll quickly mark the uptrend in green and the downtrend in red. To start off, we have our higher high and higher low. And this is the break of structure right here. Because the new high broke past the previous high, we have created a break of structure. And this break of structure occurs every time this break happens. Each time it happens, it's called a break of structure. Now the same can be said for a downtrend. So every time we break a low, that is a break of structure, and it shows that the trend is continuing. Super simple subject to grasp, Again, we sort of covered it in the basics where we talked about uptrends, downtrends, and ranges. It's pretty much the same exact concept. So again, just to clarify, in an uptrend, a break of structure to the upside will show us that the market is continuing to go up and that is looking quite bullish. And in the downside, every time we break a low, it shows us that the market is getting weaker and that we are bearish. Now, in a sideways market or a ranging market, it is slightly different. So we don't create a break of structure like we have seen here. Instead, the market will be ranging like this, and our structure is this high and this low right here. So we will either have to break down or we will have to break up, and that will be our break of structure. Now with break of structures, it is key to always wait for a candle close. Now if we go into the chart here, we can see that we had a high here and we broke structure to the upside, thus continuing the trend up. As you can see, we're in an uptrend and we are constantly breaking the structure. Here we had a break of structure, here we had a break of structure, here we had a break of structure, and you can see we constantly continue going up. Now the candle still may go below that break of structure, but as long as we don't create a lower low, it is still going to be bullish, and the same exact thing can be said for a downtrend. Here's an example for the downtrend. So we have our low right here, we break the structure, we continue down, we create a new low, we break the structure, we can continue going down, new low, break of structure, continue going down, new low, again it continues going down until we have a change of character, which is what we're going to move on to next. Now a lot of people will get confused between a break of structure and a change of character. Change of character refers to a noticeable shift in the market's behavior that often signals the beginning of a trend reversal. Change of characters usually will happen before a break of structure and is an early indicator that the current trend will be losing strength and it's changing direction. So here is an example. We see a downtrend, and every time we have a break of structure like here, we are continuing down. Now when we get a change of character, this is it. So we can see we had the lower high right here and the lower low. A change of character in a downtrend will be a higher high going above the previous low. I'll quickly mark this as green to signify the change of character. The easiest way that I personally remember break of structures and change of characters separately is that a change of character is literally the market changing. We're changing from a downtrend into an uptrend, or again from an uptrend into a downtrend. As you can see from the diagram, the biggest trades are going to be caught from the change of characters, just because you're entering or you're finding a trade that is entering a new trend in the market. We can see here, I'll quickly mark this in white, we can see here that we're getting a break of structure to the upside every time in the uptrend because we're breaking past prior highs as higher highs. Now the change of character in an uptrend is again going to be when we break past the previous low with a lower low. I'll quickly mark this as red. This is our change of character. And then what you'll usually notice, and the easiest way to determine whether a change of character has occurred, is whether in a downtrend, whether we create a higher high and a higher low. That will usually signify that the change of character has occurred and that we should see a reversal. And the same here, when we get a lower high and a lower low confirmed, this will signify that we are changing direction. So on the charts, if we go on here, we can see we were in a downtrend. Again, this is slightly more choppy, but the same still applies. So we have our high right here, and we got a slight change of character here, but again we closed below on the next candle, so this does not count. The main change of character that we got was when we fully closed here, created this high and this low thus after. Then you can see we continued trending up after the change of character from the downside. Now after that upward trend, we had this support right here, or the swing low, and you can see once we broke through, we created a lower high and thus then creating a lower low, continuing the downtrend down. Super easy concept to grasp. Again, if you didn't grasp a certain point, just rewind the video and it will be easier to understand. Now a lot of traders will use a CHOCH or change of character as an early signal to prepare for possible changes in market direction. However, it is super important to remember that a change of character alone should not be used as the sole basis for making a trading decision and entering. To confirm a potential trend change, it's advisable that you look for additional signals or confirmations, again as we discussed before, such as a break of structure or other technical indicators. If you simply enter off a change of character, then it could lead to riskier trades, your stop loss being hit more often, and you just simply losing money. Now, there is two common mistakes that a lot of people and a lot of traders will make. The first one is entering too early on a change of character without a break of structure. Entering a trade based on the change of character without waiting for a break of structure to occur afterwards can be very, very risky. A change of character only signals a potential trend change, but it isn't always an indication that the trend will change, and that's why it's always very, very important to wait for a break of structure to occur after the change of character in the direction that you want it to. The second mistake is entering way too early without seeing the change of character or break of structure candle close. Most traders will usually get a lot of FOMO and they will enter a trade before the change of character or break of structure candle closes, which can lead to a lot of mistakes. The candle might change shape before it finishes, it can reverse, it can do a lot of things, altering the signal and altering the trade. You should always wait for the candle to finish and to close and for the next candle to start on the change of character or break of structure to confirm that the trend is valid. Again, if you do this, it will reduce the risk and it will increase profitability. So here is a quick and simple trade that you could have caught using the change of character and the break of structure as your strategy. Again, we're going to cover way more things in the further episodes, so this shouldn't be your single strategy. This is just something that you could have caught by using just the change of character and just the break of structure, and again, some swing lows and swing highs. So we can see the market was moving in an upward direction here. We created this swing low and then we continued moving up, creating higher highs and higher lows, ultimately being in this uptrend. Then we created this swing high and that's where everything changed. We started going down and we created our first lower high here and lower low. Then here is where we got our change of character. We had this higher low right here. We broke below with a candle close, as you can see here by that blue candle, which showed us that the change of character is valid. Then we went back up. We created a lower high because it's lower than this high right here, and we continued down. Then we waited for the break of structure, which you can see here. We broke this low and continued down. Now, usually if you're going to use this strategy, just the change of character and just the break of structure, you would be entering just after the candle closes on the break of structure candle. So this candle closed and this candle opened, and that is where you would enter the trade. So again, got slight drawdown because we tried to retest, and usually you would place your stop loss at the previous high because, for example, the trade or the market should not go above this previous high if we are going into a downtrend. If it does, then it means the trade is invalid, and thus you should be stopped out of the position before you lose any more money. Because if we break past this high, then it could show that we're going back into an uptrend. Now that we've reduced the risk by adding in our stop loss at the previous high, the market did, luckily for us, continue going down, and we placed our take profit at the previous low. Again, you could have done any one of these lows. You could have done this low, you could have done this low, you could have also done this low. There's many lows that you could have gone from. Again, I just chose the lowest one, or you can also choose all of them and just have multiple take profits. So this is a quick and simple strategy that you can use. Again, we're going to cover way more key segments of smart money in the next episodes, and you can add those on as confluences as well. So thank you all for watching. I will be uploading the next video, which will be on the market phases and cycles as a part of this free smart money course that I am building for you guys. If you enjoyed it, it would mean a lot if you could like, subscribe, and also check out my Discord server down below. Have a great rest of your day.